G'day traders, a short video today on the 7-step blueprint to a consistently profitable sniper trading mindset and plan. How to make your trading consistently profitable and stress-free without spending hours at the screen. Hopefully today's video will impact a lot of traders. I received a lot of emails and questions, a lot of variables and things that are almost outside of the real specific approach to the market, that traders are looking for these little innocuous bits of information that show they don't really have a concrete trading plan. So hopefully today's video will help anchor that and reinforce some of the concepts that I've been talking about in terms of building your playbook, having specific trading setups that you go to the market with each day. And first of all, let's talk about most retail traders. And just to reiterate, I have made every mistake under the sun with trading. I've done several things wrong over and over again. Spent years pounding my head against the pavement, doing, everything under the sun, things that I thought I would never do. I just have had to learn so many painful, excruciating lessons, and many of them over and over again, because the market comes at you the same way in multiple variations, but again, reinforcing that I didn't really dig deep and do work on myself. I didn't really have an edge. I didn't really have the self-control and discipline because I did not have an edge or the proper mindset about going to the market and how I was approaching the market. All these little things that I've had to learn the hard way over time. Spending hours at the screen, focusing on trying to trade the market or trade the moves that the market was throwing out there, catching moves, having no specific set of criteria for trading or a consistent plan. So, just going there and, looking at technicals and just different things that were completely unaware and oblivious to the fact that there was a grand organized design, that there are other traders, other systems, HFTs, algos on the other side of the screen, specifically enticing me into their traps. And not understanding the market mechanics and dynamics, engaging in impulsive, erratic, emotional behavior, basing success on whether or not I was profitable or not on a trade. So taking a trade and whether or not it was a good trade setup, a poor trade setup, averaging into a loser, coming out green and thinking that was okay because I ended up profitable. Crazy stuff. Riding an emotional roller coaster of elation and depression day in and day out, up one day, down the next, elated, depressed, feeling anxious and uncertain because there was never really a consistent approach that was concrete and not producing the results that were concrete. Emotionally unstable as a result of that. Believing and confident, but not having that actually showing up in a mechanical process each and every day. Having a good run and then blowing up my account. Doing that again and again and again. A professional trading sniper mindset. That is where I hope to impart today. And just defining what a sniper mindset is. The trained sniper is a complex fusion of hard skills such as weapons knowledge, situational awareness, knowledge of ballistics and physics, and soft skills such as emotional stability, empathy, and a stoic acceptance of the hardships associated with a particular set of circumstances. There are countless instances where a single sniper embarking on a secret mission would have to improvise, operate beyond any hope of support, and yet still manage to carry out the mission and get back home unharmed, even though the enemy was actively hunting him. I think that really defines a discretionary private trader, retail trader, to a T, because 99.9% of retail traders probably trade on their own. As I've talked about, they wear all the different hats. They're the risk manager. They're the trading coach. They're the trader, they're the office manager, all of those things. And a sniper mindset is one thing, but having the complex fusion of not only the hard skills such as weapons knowledge, situational awareness, so being able to identify the type of market conditions you may be in on that day or in that week or that month, knowledge of ballistics and physics, so what are your actual trading setups? Are they suited to those market conditions? And your soft skills, emotional stability. Are you in control of your own emotional state? Are you going to go into tilt? Are you going to go and overtrade? Are you going to anger trade? Are you going to revenge trade? Are you going to, have a really great trade from your trading plan and then keep trading afterwards in taking poor quality piker trades and then blowing up the results of your good trade? All of these different things that after you've been trading long enough and you've made all the mistakes that the market will expose to you, do you realize the importance of developing a sniper mindset? And the sniper mindset is building your playbook, having a specific set of criteria that you follow, and then being able to execute that flawlessly under any environmental conditions. The first thing I would suggest is that you set a specific time for trading. Now, I've talked about this in my other videos, the 12 candle window, the 3-hour windows, Asia, London, New York. Specifically, my main focus is the New York session. Obviously, I have trades in Asia and in London, not all the time, but because of my time zone in Perth, I have access to all three sessions. And there are opportunities, depending on the templates of the week, the trading setups, there are opportunities in all three sessions. But again, my main focus is the New York session. I'd stick to those times very specifically. And part of that reason is because outside of those times, again, you'll enter into more trades. One trade out of my playbook in New York or in Asia or even in London, in that timing window specifically, can outweigh, we can get a 75 pip move in 15 minutes on oil rather than sitting through an hour for 25 pips in a low quality, poor quality trade setup outside of my timing window. Or you can sit there for hours nursing a trade, hoping that it moves in your direction, or averaging into a losing trade that's not going in your favor, not realizing that you're in a zombie time, a time where the market is consolidating volume before it bursts in that next 3-hour window. So important to set specific times. Again, thinking like a sniper, you're going there to execute one great trade and then you stay off the screen. Number 2, you need to build a playbook of your best trade setups that has breadth. Everybody out there knows this, but I've asked traders this. What are your 2 or 3 best setups? What are they? Tell me exactly what they are. And people are telling me that certain criteria and parameters, but they don't actually have a specific setups. And this is critical because when you build your playbook, and a lot of traders have asked me if they can have a copy of my playbook. And I'm in the process of putting that together. And if that interests you, just down below in the comments, put playbook, because I am going to come out with that hopefully in the next within the next week. I am putting it all into a written format in detail, and specifically that playbook has been hardened and built over time, and all the garbage has been filtered out of that, because you must have an edge. You must have an edge, not just trade setups, but trade setups with edge. And again, that has come from painful learning of just going there thinking I was trading setups, but they were just trades. They actually weren't trade setups with edge. So you need to build your best trade setup playbook so that you have setups for different market conditions, trend setups, reversal setups, trading range setups. You could have a reversal trade that's within a trend because of the criteria of how that's set up during your specific trading time. It may be in a trading range, but on a smaller time frame, may be a trend trade. So you can get a 100 pip move in a trading range on oil that's a trend trade on your smaller time frame during your trading times. Again, this has to be built into your playbook. So you need to know all the variables and variations of how those best trade setups will present. So for example, you could have a 3-day setup that presents, but it's built over 2 days. Now that sounds strange. It may form a peak formation on a Tuesday, peak formation high, and a peak formation low on a Wednesday, but that was from a full range day on Monday that put that peak formation in place Tuesday morning. So it's actually a 3-day setup, but a lot of people wouldn't catch that because the way the price action shows up on their charts. So there's little variations and variables that will be subtle because part of the market's tricks. So they're not going to just come and hand feed you textbook perfect setups out of your playbook. There's going to be variations of how that data will present. And then the next part is don't take any other trades than the ones from your playbook. So again, I emphasize a lot of this sounds like we're, lip service, but most retail traders will fail. 90%, but that's 99% will fail because even though they have a plan, they actually do other things outside of their plan, and that's usually where the damage comes undone or comes into their trades. So it's not only having a playbook of your best trade setups, but then also not doing anything other than your playbook trade setups. Sounds easy, but again, most traders, if they had to present every single trade that they took in front of an audience, they would have trouble substantiating a lot of the trades that have shown up on their trading account. Number 3, having a daily process to identify the best candidates for your best trade setups. So again, you have your playbook now. Now you have a basket of instruments that you're following, maybe 6, maybe 8, maybe 30, maybe more. How are you going to filter that down to the 1, 2, or 3 that are the candidates for a best trade setup? Maybe only one of those is going to be a best trade setup within there. But how are you going to be able to identify those? Now, I follow the major pairs, gold, S&P, NASDAQ, oil. And out of those, I can easily manually identify 2 or 3 within a 5-minute span. It's pretty straightforward. My process is pretty simple. And so, depending on the instruments, the type of instruments, the number of instruments that you're following, you may be able to do that manually, but maybe you need a scanner. Sometimes I do look at the scanner on TradingView to see if there's any other instruments that I could take a peek at to see. They may actually have a cleaner setup if they've had a lot of movement or if there's an opportunity in a cross pair, for example. So how will you identify your best candidates for your best trade setups? And number 4. Which of your best trade setups are going to be scalp trades in terms of the position sizing and the profit potential, and which ones are going to be scalable or have the potential to be traded with more size and have greater profit potential? So again, risk management and opportunity management. So I know a lot of traders talk about risking 1% on every trade and you'll never go broke and everything else. There are certain trades that are going to give you huge opportunities in terms of their profit potential, their probability / possibility, and they're the ones that require the knowledge and understanding of when it's appropriate to size in or take more size into a particular trade. The reward to risk is skewed, even though people will struggle with this. There are opportunities and times in the market when the risk reward is skewed more heavily. Now, there are other trades where the risk reward, the trade possibility is high, the opportunity is high, but it's maybe only a 25 pip scalp. The market may move bigger later. So, for example, we get a 25 pip move in Asia, locking in a high. The market may consolidate and head into London and move 50, or consolidate in Asia, London, and move 100 in the New York session. So know when it's appropriate with which one of those setups are scalpable, which ones are scalable. And a quote I love that I've been told by a trading acquaintance in the States: size the best and scalp the rest. And I think that hits home. Number 5, have a basket of instruments that provide the frequency of trade opportunities that you are after. So again, I follow the 7 major pairs: gold, oil, S&P, and NASDAQ. Now, I know there are plenty of other great markets. Part of that is just me filtering it down to a specific basket that I feel gives me the frequency of trade opportunities. I know them intimately from having traded them now and learned a lot of hard lessons and learned the behaviors of each one of those instruments. And that's plenty for me. And part of that also is how my spreads are with these instruments. I know other traders trade the DAX and their spreads are better. My spread on the DAX seems a bit wider. The Dow is a bit wider, just slightly. But, again, I'm not interested in trying to cover too many. So what is the number that you can handle and manage, and what is the number that offer you the frequency and the types of instruments that offer you the frequency of trade opportunities that you're after. So I don't trade stocks. I know some traders specifically specialize in the stocks. They don't like currencies. I don't trade the majors a lot, but there are great opportunities on the currencies. So again, I like the indexes, I like gold, and I like oil. But I follow the major pairs, and I'm looking for the same setups to occur over once or twice a week on each one of those pairs for one of the best trade setup candidates. Number 6, coming back to the sniper mindset. Know how to manage yourself before, during, and after your trading hours and your trades are completed. So how do you manage your day? How do you manage your mindset? How do you manage your time? How will you prepare not only for your day but for your trading session in order to be able to now execute the plan, to execute your best trading setups, to stick to your plan, to not engage in other erratic, irrational, self-destructive behavior. So it's important to build a concrete, high-performance daily routine. I talk about this in my 7-step daily routine for high-performance traders. Are you going to keep trading after you take a trade? Now, my many traders that you've been following me long enough now, I talk about taking the trade and shutting it down. I know there's going to be more trades. Maybe if I'm done in the first hour of New York, there could be a second, New York Open trade, all that. I'm not in the mindset to keep trading. I've learned some, again, hard, painful lessons. I want to lock it in, and I want to walk away from the screen. I don't want to keep trading. In fact, I don't even want to be near the computer after that. My goal is to make money. And I found that with myself, the more trades I take, sometimes I'll get lucky. But in the past, not having a plan, keeping trading and everything else, I end up giving it back. So my goal is to execute my trade plan, my 1 or 2 best trade setups, get off the screen, lock it in, shut it down. So what processes do you have in place to ensure positive growth mindset versus self-sabotaging behaviors? Very important, because managing yourself will be the number one thing that ensures not only your progress, but also can ensure the detriment of your trading career if the right parameters aren't put in place. And number 7, having an actionable review process to monitor your mindset, behavior, and live performance to ensure not only your progress and constant improvement, but the flawless execution of your trading plan. So again, asking yourself each day, each week, what is working? What am I doing well? What isn't working? what could I be doing better? Or what is not working for me? Should I cut it out? Should I eliminate it? Or what can I do to make sure that I don't go into tilt? Whatever the things are that you need to focus on that are working, and the things that you need to eliminate that are interfering or aren't working with you getting good results. And then what do you need to be working on? What can I improve? Where are the areas that I'm weak in? Maybe I'm good at getting into the trade, but I hold on too long. Now, I learned a lesson years ago. One of my mentors talked about himself learning this lesson, and I didn't really get it. I used to get into a trade, and, it was going to go 100 pips. And this is back, just on a major pair. And it was probably a 25 pip move, but I would get stopped out at break even, and I would get into a lot of really good trades, and I would take nothing off the table. And one of the things I need to learn was how to take a profit. So the first thing I always do now is my profit target is locked in. As soon as I get into the trade, my stop's put in place, my profit target's locked in. I get out of the trade as it's moving through my profit target. So I don't worry about trying to get every little bit out of the trade. I want to make sure that I get paid, though. And that is one of the things I needed to work on, was learning to take a profit. What do I need to stop doing? How can I get better? These are the questions that, an actionable review process, not just a review process, knowing I need to do these things, but how are you going to ensure that you are going to improve, and how are you going to do it better? What are you going to do? What's actionable about the review process? What is the steps? What are the actual steps that are going to actually make the results better next time you do the review process? What's going to be the change? So not just knowing that you need to do those things, what is the action steps involved in order for you to get better?